Is Lukman Isa, Treasurer of Amal, and your host for today's webinar. As customary, today we begin today's webinar with a short prayer by Maulana Riaz Day.
Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Sallallahu alayhi wa ala alihi wa ashabihi ajma'een. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار اللهم افتح لنا بالخير واختم لنا بالخير واجعل أواكب أمورنا بالخير بيدك الخير إنك على كل شيء قدير إن الله وملائكته يصلون على النبي يا أيها الذين آمنوا صلوا عليه وسلموا تسليما اللهم صل على سيدنا محمد وعلى آل سيدنا محمد وأصحابه وبارك وسلم سبحان ربك رب العزة عما يصفون وسلام على المرسلين والحمد لله رب العالمين.
Shukran Maulana, Jazakallah for the dua. Our first speaker for today is Suleiman Lokat. A brief bio of Suleiman. Suleiman is a senior partner at SNG Grant Thornton, the South African member firm of Grant Thornton International, an international audit and advisory firm. Suleiman is a qualified chartered accountant with more than 20 years of experience in audit and advisory space. Having provided audit and advisory services to some of South Africa's largest multinationals, JSE-listed entities, and major parastatals. He is presently one of the lead partners within SNG Grant Thornton's Durban office. Welcome, Suleiman, and thank you for joining us today.
Assalamu alaikum, Lukman. Hopefully everybody is well, and Jazakallah for the opportunity to speak to everyone on this. I'm not sure weather-wise across the country, but Jazakallah for having us on the day.
Thank you, Suleiman. Just before we begin today's events, we have the agenda overview. And before we get into the entire presentation, I'd like to find out from you, we have an interesting topic lined up for this morning, and it is pertinent and a major issue in South Africa faced by all. What gives rise to the consideration of this topic for discussion?
So, Lukman, again, an interesting question. And I think if we look at it, the issue of immigration or migration is not something that's new to us as South Africans. I think a number of the audience members are progeny or part of a legacy of migrants that came into the country. However, of late, we've been noticing and recognizing a substantial increase in interest in the aspect of immigration, largely brought on by a number of factors. But the conversation is starting to pick up momentum. As you would note, and I'm hoping that a lot of you are not struggling with load shedding, but it's a reality that we're having to face. And also from a corporate perspective, and as a corporate organization and advisory firm in South Africa, we're finding a lot of interest coming from our clients as well. To align with Minara and Amal, obviously there's certain groups that have been created to facilitate discussion, and we know that that's been multiple times oversubscribed. So in light of the interest, we said there's a need for us to share more information and engage in understanding some of the dynamics around the aspect of migration from South Africa.
Thanks, Suleiman. Just before we proceed, I've got another two more questions to pick your brain. So are we promoting South Africans leaving the country? And also, what are we hoping to achieve from today's discussions?
So Lukman, again, I think upfront, and we'll be very clear, we as SNG Grant Thornton, a proudly South African firm that's entrenched in South Africa and grew out of South Africa, together with Minara and Amal, recognize that, or not recognize, we firmly believe and have it entrenched in ourselves that we are proudly South African organizations. We see a lot of benefit in the country. We see a lot of positives in the country, and we by no means, and I'll stress this, Lukman, because I don't want anybody to misinterpret it or misunderstand it, by no means are we supporting or trying to divert people's attention away from the consideration of migration. The aim and intention here, and for today's discussion, is one around sharing information, sharing insights, sharing considerations that one should be considering as well. I also wish to note that obviously, considering our audience and being Muslim first, the key aspect to consider is the Dini aspect, which sometimes we overlook. Something in preparing for this and engaging with some of the ulama, the interesting part, and we will get to that later with Mulana Riaz, the aspect of putting our deen first, the aspect of looking at our deen sometimes gets overlooked when we encountering challenges. Added to that also is we know that as insan and as human creation, one thing that we are very good at is complaining, and unfortunately South Africans are regular complainers as well. That being said, we sometimes overlook the bounties and what we have been given, and always are looking towards what we don't have. And I think, again, the purpose of today's discussion is around bringing that to the fore, bringing some of the considerations that one would have to the fore, and understanding what one would need to consider. Similarly, Lukman, and maybe this will build up in terms of later presentations that we hope to have together with Minara and Amal, is that the topic of immigration and immigration out of South Africa is very diverse. There's so many factors to consider that in putting the slideshow together, you'd understand it has a specific slant towards taxation and taxation ramifications. The topic is so diverse that one would need to consider elements of cultural diversity. What would it be to be living in those countries, and specific legislation in those countries, etc. And inshallah, over time, we're hoping to have further sessions similar to this with yourselves and also the wider audience on country specifics, and we can cover that later.
Shukran, Jazakallah, Suleiman. The floor is open to you and the presenters upcoming. Thank you.
Jazakallah, Lukman. As we played through this and did a lot of research, there obviously has been, and taking into consideration the requests from our clients and also general discussions that have been held, the statistics do indicate that South Africa and immigration is not something new, as I alluded to as we commenced. The immigration hotspots are largely there, and most of these would not be uncommon to yourselves. The likes of the United Kingdom, Turkey, Dubai, Mauritius, Australia, New Zealand, Canada, all of these are countries that we presently are identifying as areas that individuals are looking to for possible migration. And the reasons are quite diverse. One of the keys, obviously, the language barriers and whether we can acclimatize ourselves to those countries. However, we wanted to stress that there's substantial reasons for us to live in the country and stay in the country. The most significant, which in doing this research and the reality, having traveled and through Allah's bounty and blessings, having seen a number of other countries in the world, our religious freedoms that we are able to exercise in South Africa is substantial. I think we sometimes think that, you know, we live with all of these challenges, but the religious freedoms, our ability to exercise our deen, is something that is quite, it's unparalleled actually for the rest of the world. Similarly, if we look at the cost of living, we are living in a country which is substantially cheaper when you look at the cost of living analyses that are done, and I'll share some of the statistics later. Private healthcare is also a substantial area that we're finding foreigners coming to South Africa to enjoy our private healthcare, and also given that they benefit from exchange rates as well. From a natural beauty and diversity, we have a hodgepodge of cultures that seemingly comes together and works to build this beautiful country. Our weather conditions, thankfully, we don't experience the significant cold that we see in the likes of Canada and the UK. And also, we don't see the significant heat that those experience in the Middle Eastern countries, for example. And our lifestyles also are quite entrenched. We really need to consider the benefits that we see out of the country. Notwithstanding that, I think it would be a dismissal for me to say that there are the factors that one needs to consider. The crime rate has always been an issue that we as a country are challenged with. And in that being said, we also need to note that crime is not uncommon across the globe. It's something that's a phenomenon that exists. Load shedding and the constant deteriorating infrastructure, the likes of potholes, it's part of a reality. But also, again, I would argue that African countries are experiencing those as well. There are load shedding challenges. The UK had it very recently as well. State capture and corruption, obviously an area that one would need to bring into the agenda. Our tax regime, obviously, given the economics of our country, is substantially higher than a number of countries as well. On this point, it's quite interesting, and we'll talk a bit about it later, is that the tax regimes of all countries are undergoing revisions and changes. We're hearing of corporate taxation now within Dubai, which is new. Again, indicative that we are playing in a highly fluid marketplace that we need to operate in. Better education is obviously an issue that we all are worried about our children, our progeny, where are they going to be placed? And also high unemployment. I mean, we're not going to run away from the fact that South Africa is enduring substantial unemployment rates, and the prospects may be greener on the other side, but those countries themselves are also going through challenges as well. So with that being said, it brings us to the topic and starting the topic for today. And when looking at factors that one should consider when looking at options around immigration, the issue of religious freedom, I believe, is a substantial or should be the foremost point when one is looking at this option. Are we really going to be able to practice our deen the way we would want to, the way it's supposed to? And will we be able to exercise the religious freedoms that we have in this country, in other countries as well? An important aspect also to consider is that a lot of what we enjoy today is through the hard work and forbearance of those that came before us, who also were migrants as well. Other options include considering whether we really want to leave the country, or are we looking for an option B, that should something happen, are we able to hop on a plane and go to another country and be set up? Whether we are able to secure citizenship or residency is another question. A number of countries have specific legislation, and in some cases you may have residency, you won't get citizenship. But an important aspect to note is also we've been seeing a lot of challenges in these international countries where they realize that having so many foreigners entering is a challenge, and they start to impose legislation to get rid of foreigners that are in the country. The tax implications, and what we'll talk about later on today, is of significance, and SARS is not going to leave you alone or make it easy for you to leave the country. The cost of living also, I mean, if you consider the exchange rate, it's actually better for foreigners to come here than us to go overseas. And we do have substantial costs encountered in foreign countries as well. Currency and reserve bank requirements are also there in terms of movements of funds across the globe, which is receiving substantial attention by legislative organizations across the group. The other aspects I wanted to cover was, what about your pensions and retirement assets that you created here? An important aspect which Mona Riaz will touch on from a deen perspective is around what happens if you pass away in the country? What happens to your estate? In South Africa, we obviously have certain legislation that supports our wills and estates when we pass away and we have an Islamic will. But what happens when you go to another country that doesn't recognize it? All of these factors are, and I don't think it's a complete list, but some of the key factors that one would need to consider when looking at immigration. Some interesting facts just that I thought in preparing for this slide or preparing for this presentation that one should need to consider or would want to think about. In total, the estimates, and obviously exact data is not there, but almost 1 million South Africans are presently living or are living in foreign countries at present. And this is per the UN stats. So obviously not the greatest data, and the exact data may not be 100%, but plus minus 1 million people. The majority of those appear to be living in the UK. However, the positives around our country versus the rest of the globe, and this was a very interesting stats that I got coming out of a Mercer cost of living report, which was done across 227 countries. Hong Kong is one of the most expensive countries to live in from a cost of living perspective. Dubai, sitting at 31 out of 227. But most interestingly was South Africa, and from a South African context, Johannesburg and Cape Town were sitting at 193 and 194 out of 227. For a number of our audience members within the Minara Forum in Durban was sitting at 216 out of 227. And the cheapest country was Ankara in Turkey. So cost of living, we're not doing that bad. Consumer prices in London are 153 times higher than that in Cape Town. Also, recent stats are indicative that there are South Africans who, notwithstanding the load shedding and having experience having left the country, have come back. And we're looking at about plus minus 400,000 people that have come. An interesting aspect in terms of our need to give back, because we do concede that as products of South Africans and possibly third or fourth generation South Africans, we have benefited from this country. And we also have a responsibility to play those opportunities back. An interesting statistic, again, that I picked up is that for every South African that returns into the country, you're basically creating 9 new jobs in the formal and informal sector. And again, these are interesting things that we came up with. There's a lot more out there around why leaving could work, but also reasons why we should actually reconsider it. Again, I think for me, the key aspect that I was keen to bring in together with the tax ramifications was the issue on an Islamic perspective. And Alhamdulillah, Maulana Riaz Dai has agreed to share some insights from an Islamic perspective. I think we're very keen or we understand, and we need to understand, our deen is a comprehensive deen. Every aspect of our lives are covered in terms of our deen, via the Quran, via the Sunnah. And Alhamdulillah, our deen even covers aspects of immigration as well. So Alhamdulillah, Maulana Riaz Dai is a close friend of mine, but also, Alhamdulillah, Allah has blessed him with having, I would call it, the best of both worlds. Maulana Riaz is not just a Maulana and an alim, but also is a qualified chartered accountant with more than 15 years experience in the corporate sector. He has multiple accolades. So Allah bless him with more and more, not only in the Islamic perspective, but is registered and is a leading expert in the fields of IFRS, financial reporting, corporate governance. He assists a number of clients also with corporate governance and advisory functions. So Mona, I know I can keep on singing your toes, and Allah bless you with it, but I'll hand over to you just to share some insights from an Islamic perspective on the element of immigration, because our deen, as I said, is comprehensive. Mona?
Jazakallah, Hafiz Suleiman, and Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen, wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Sallallahu alayhi wa ala alihi wa ashabihi ajma'een. Assalamu alaikum to all of the attendees of this webinar, and Jazakallah to Grant Thornton, Amal, and Minara for arranging this very important webinar. And this is really how we should be approaching these issues, where we assist one another, we draw on the expertise that different members of the community have. Rasulullah sallallahu alaihi wasallam mentions in a hadith that every believer has some good in them. And so each person has got certain things that they can contribute towards this conversation. Of course, some have got more experience than others. And alhamdulillah, as this decision is taking place amongst many people in South Africa and within the Muslim community, it's important that we use our networks with one another to try and get the best decision and the assistance through this very difficult process. And make no mistake, immigration is a very challenging process in all respects, from a financial perspective, from an emotional perspective, from a religious perspective as well. So today I just want to share some thoughts and some pointers with regards to the Islamic perspective. And it's something that we need to keep very clear and focused in front of us, because in reality, our purpose on earth, and that is what Allah subhanahu wa ta'ala mentions, وَمَا خَلَقْتُ الْجِنَّ وَالْإِنسَ إِلَّا لِيَعْبُدُونَ, that I have not created jinn and mankind except to worship me. And Allah subhanahu wa ta'ala further goes on to mention that I am not asking them to provide their rizq. I am inna Allah huwa ar-Razzaq. Allah subhanahu wa ta'ala mentions that verily Allah subhanahu wa ta'ala is ar-Razzaq. But what we are responsible for is making sure that we do everything in our power for ourselves and our family so that we can be successful in the akhirah. So this is the context that we need to bring within ourselves in terms of how we move forward on this decision. And as we do our due diligence on the financial aspect of moving across, both from a tax perspective, from an economic perspective, in terms of understanding the jobs that we are eligible for and the skills we have to offer, or from an investment perspective, if we are getting residency and citizenship by investment, as we do our due diligence around the right community that we want to live in terms of our children and their schooling and their upbringing and their future and the university prospects that they have, In the same way, it is very important, if not more important, for us to do our due diligence from an Islamic perspective. And we will be held accountable for this. Therefore, we need to make sure that we do this due diligence in terms of where we are looking to relocate. And this is the objective that I want to share with you today, is that as we make this decision, and it's a very personal decision, as Hafiz Suleiman mentioned earlier on, this webinar is not encouraging one or discouraging one. What is trying to be achieved is to put down all of the facts on the table. And of course, this discussion is far broader than something that can be covered in 2 hours. So in the limited time that I have, I just want to share some aspects with regards to the dini aspect. Now, we know that Rasulullah sallallahu alaihi wasallam engaged in hijrah, and he migrated as well. And one of the famous ahadith that Rasulullah sallallahu alaihi wasallam is reported to have mentioned is that innamal a'malu bin niyat, that actions are judged on their intentions. And this hadith was reported by Umar ibn al-Khattab radiyallahu anhu. Now, of course, the hijrah that Rasulullah sallallahu alaihi wasallam undertook was a hijrah, an immigration for dini reasons, for Islamic reasons. The conversation that we are having here in South Africa, we're not moving because of dini reasons. Primarily, we are moving because of dunyawi reasons. So we cannot say that our immigration is a hijrah in the Islamic sense of the word. But at the same time, what we take from the lesson of hijrah and from this particular hadith, that Rasulullah sallallahu alaihi wasallam says that whoever immigrated for worldly benefits, his immigration is for what he emigrated for. So whilst we are moving for worldly benefits, we must keep this intention very clear in front of us, that we should also be considering the impact on deen and the Islamic side of things on ourselves and our families. This is a very important due diligence that we need to carry out. Now, if we look at the Sharia, and I just want to touch on an aspect which is maqasid al-Sharia, the objectives of the Sharia. The objective of Sharia is to ensure maslaha, to ensure well-being, goodness for the entire community. And all of the laws, the regulations, the prescriptions that we find in Sharia, in reality, they are there for our benefit in this world, so that we can be protected from harm, from challenges, from difficulty, and that life can continue in a way that is blissful and enjoyable for each and every one of us. Now, within Maqasid al-Sharia, there are 5 key areas that the Sharia looks at and looks to protect. And the first one of them is Hifzuddin, the preservation and the protection of religion. This is the overarching objective of the Sharia. Whenever we are faced with different issues, we will find that the Sharia generally, there are exceptions to the rule, but generally will default to that route wherein deen and religion is protected. That is above some of the other areas that the Sharia has as an objective. In addition to that, we have hifzun nafs, the protection of life, the protection of one's intellect, the protection of one's nasl and progeny, the protection of one's wealth, which actually ranks, according to many of the scholars of Maqasid al-Sharia, as the last of all of the objectives. The protection of wealth in this hierarchy ranks as one of the last objectives. So as we carry out our decision on immigration, whether we should immigrate or not, firstly, and secondly, which location we would be looking to emigrate towards, we should keep this framework in front of us, and we should always try and prioritize the dini aspect before anything else. Now, personally, I have had the opportunity of spending a lot of time overseas in different parts of the world, and particularly in North America. I have some very close family in different parts of the world that have immigrated, and I've had the opportunity of interacting for lengthy periods of time with the community. And I just wanted to summarize 2 or 3 of the big challenges that you will find as you move outside of South Africa. And these are things that you would need to consider as you make your change and as you do your due diligence. Now, of course, this is not an exhaustive list. There are other things, but particularly from an Islamic perspective, the first thing that we should be looking at is we should be prioritizing our deen. Wherever we go, what infrastructure is there for the protection of the deen for my family and I? So that is the most important thing that we should be looking at. Then the second thing that we should look at, and Islam places a very high level of emphasis on the family unit, what is the impact on my family, my children, my parents? There's many considerations from an Islamic perspective on how we will be navigating that. On the one hand, we may be looking to emigrate for a better future for our children, but do we and have we made arrangements for our aging parents that may be left behind? Now, of course, there's ways and means around that. It's not a cut and dry situation, but these are considerations we should be looking at. And then after that, we should look at the economic considerations of where we're moving to, what will be the impact, what will be the financial situation in terms of emigrating, the tax implications, etc. So we should try and keep this framework very clear, that the priority in everything that we do should be focused towards our deen. Now, if I look, and if you are looking for 2 or 3 important points that you should be looking at when you are researching a location, the first thing is that what is the proximity of the masjid to the area that you are moving towards? The masjid environment is a hugely important environment, and there are many things attached to the masjid which help to build a community. And you're going to find that when you move overseas, the masjid is going to become more important to you than perhaps it may have been here. Of course, it's very important here while you are locally in South Africa as well, but we have the benefit of 4 or 5 generations of Islamic infrastructure attached to the masajid here, which we often take for granted. Now, when you move to a foreign location, the masjid becomes the center, and you need to be committed, particularly for the safety of the deen of your children, to attend that masjid regularly and become a part of that community. The second thing that often people see overseas is that there is often a challenge when it comes to access to halal food. So we need to understand where we are going and what is our access to halal food, and understand the complexities that you might find overseas in different communities because of different reasons in terms of the access to halal food. But this I would rank as a very important aspect. And from the people that I have interacted with, this poses a huge challenge for many of them, where they end up in locations where the access to halal food is challenging. As their children grow up, it becomes difficult for them to continue to consume halal. And then, of course, once we start to move towards doubtful food, this has a serious implication on our deen. The last thing that I want to share is that we should be looking at the education system where we're moving. The challenges that we are seeing globally, and particularly in first world countries already with regards to education. We have got an insular environment in South Africa. So understand, are you putting your child in a public school or a private school there? What are the value systems that that school has versus an Islamic schooling system? And then very importantly, what infrastructure is available for the maktab system? And I cannot stress this more, that the online system is not a sufficient substitute for face-to-face, heart-to-heart transfer of the dini knowledge. So these are some of the important considerations. And then finally, when we make this decision, we should ensure that we engage in a lot of dua and istikhara. Istikhara is a very important aspect. Rasulullah sallallahu alaihi wasallam, this hadith comes in Bukhari, where he mentions that he taught the Sahaba radiallahu anhum istikhara in all matters, as he taught them the surahs of the Quran. And he said that if any one of you thinks of doing any job, then he should offer 2 rakats of salah, nafil salah, and then he should mention this following dua. And in this dua, we won't have time necessarily to go through the entire dua, but the essence of this dua is that Rasulullah ﷺ is encouraging us that when we look at making a decision, then we use this framework. And in this dua, we ask Allah subhanahu wa ta'ala for his guidance, firstly. And secondly, we say that if this matter that I am going to be undertaking, in kunta ta'lamu anna hadha al-amra khayran li fi dini, if this matter is good for my deen, wa ma'ashi, my subsistence, my livelihood, and finally my akhirah, these 3 things, then make this matter easy for me and bless me in it. It's a very powerful dua, but it's also giving us the framework for any major decision. And on the converse, Rasulullah ﷺ mentions that if this dua is bad for my deen, bad for my subsistence, and it's also bad for my akhirah, then turn this away from me and give me the ability to find something that is better for me and make me satisfied with it. So this is a very powerful dua. Istikhara is something that we should continually make at every step of the way. So Allah subhanahu wa ta'ala has given us this treasure and we should use it to guide ourselves. May Allah subhanahu wa ta'ala make this a blessed discussion, and may Allah subhanahu wa ta'ala guide us to make the right decision. Wa akhiru da'wana alhamdulillahi rabbil alamin.
Jazakallah Mulana, and Allah bless you with the knowledge that you've shared. And inshallah, we make dua that Allah make it such that whatever you imparted also, we're able to action upon it as well. I mean, there's so much information out there, and Jazakallah for making it as practical as possible. And interesting dynamic, or two interesting dynamics that in engaging with Mulana in preparing for this, you know, especially considering the time of year that we're seeing, the actions of Hajj, and a number of us are seeing our family members and relatives moving on the journey of Hajj. Again, as Mona had said, there's so much in our deen around people migrating for deen. The journey of Hajj again is an aspect of migration that was actively executed by a number of us. But also, this is part. Ibrahim alayhi salam had gone on Hajj also, where he was instructed to go to a different land. Similarly, Mona did share that the aspect around family and our commitments to our families that exist within the country when considering immigrating is there. I have had also a number of my friends that had challenges having left the country and then a funeral occurs. And as a result, how do you manage that? Especially when guys are looking at the tax ramifications and saying, when I need to be out of the country, I'm not allowed to come back for the funeral. Or how long does it take to catch a flight? Or can I get a flight back home if something were to happen? So aligned to this quote, an interesting quote that came up, and I know Benjamin Franklin is regularly quoted, is that in this world, nothing can be said to be certain except for death and taxes. And we all know, and unfortunately, it's a reality of life, that taxation is a key aspect that we have to carry the burden of. And with this in mind, we as SNG Grant Thornton thought that we would share some of the insights around the tax ramifications if one were to consider leaving the country as well. Again, the reason why we focused on tax, the challenge is that this topic, as Mona also alluded to, has so many facets that one needs to be considering. It is not a light decision that anybody takes, and it's not the easiest of decisions as well. So within that, and because it's so broad, we obviously are able to share insights into the South African context from a tax perspective, but there are so many other areas that we wanted to bring to the fore. And as I said at the commencement, and inshallah, through Allah's mercy and in collaboration with Minara and Amal, further sessions will be held. We will then now focus around the taxation ramifications of that. And Alhamdulillah, we joined with Raisa Hanif, one of our senior managers within SNG Grant Thornton. Raisa's CV is very extensive. So she's also got a host of degrees behind her name. She's an attorney and registered lawyer. She has tax specialization, legal specialization. Also, Raisa, I know I'm not doing justice to your very vast CV, but perhaps I could hand over to you just to intro the speakers that are talking through and also some of the considerations on what we're seeing. Raisa has been actively assisting clients in offshoring and transferring of assets and creation of assets across the globe, but from a South African perspective, and has successfully executed a number of mandates for our clients as well in helping them maneuver through these difficult considerations in collaboration with our member firms across the globe. So Raisa, I hope I can transfer to you, and apologies again for doing a disservice to your substantial credentials.
Assalamu alaikum, everyone. Jazakallah, Suleiman, for that introduction. As Suleiman has said, my name is Raisa Hanif Danka. I'm a senior manager within the International Tax Division within SNG Grant Thornton. So just to tell you a little bit about Grant Thornton, within our network, we are quite a vast network of independent assurance, tax and advisory firms that's made up of approximately 68,000 people, as you can see on the slide. And that is over 100, we work across over 145 markets. So, you know, our logo and our intention is that we're here to help dynamic organizations unlock their potential for growth, because we operate everywhere you are as well as everywhere you want to be. Now, specifically, the tax department is a strategic division within SNG Grant Thornton, which specializes in corporate tax advisory, compliance assistance, transfer pricing, indirect and international tax advisory, and also tax technology. So the different disciplines work together in all engagements to be able to ensure that the best tax advice is given to our clients, and this advice adheres to the entity's best risk practice and targets exactly what the entity or the individual is trying to achieve. You'll also notice that the department employs attorneys like myself. They also employ qualified chartered accountants, tax practitioners, and technology and data specialists. Our senior team members participate in various industry platforms, and we regularly comment on tax-related discussion papers, proposed bills published by relevant government authorities, and other publications. We pride ourselves in that our tax professionals have been involved in the tax planning and compliance services, audit and advisory services of entities and individuals in a variety of industries, as Suleiman had also mentioned. Now, if we zone into the topic at hand, with the mass exodus of both professionals and businessmen from South Africa, our team has been receiving numerous requests for assistance from clients seeking to ensure that as they make this very big move, they are fully compliant from a South African perspective. As SNG Grant Thornton, we see ourselves as advocates in developing strategies to investigate our clients' challenges and can tailor our scope of services to meet a wide range of needs in this area. In looking at these areas, we're also very proud to say as SNG Grant Thornton that not only do we have people on the ground with the experience to assist both individuals and companies with potential moves, but also that we have successfully completed engagements of this nature through collaboration with our GT partners in numerous jurisdictions apart from the hotspots that Suleiman previously highlighted. Now, with that being said, and without further ado, I would like to introduce my colleagues from the Global Mobility and Employees Tax Service line of SNG Grant Thornton. These colleagues are Nokukanya Madilonga and Lawrence Mbokwe. Nokukanya is a senior manager that leads the GMS, the Global Mobility Services and Employees Tax team, with the assistance of her senior consultant, Lawrence. Both have extensive experience in assisting individuals with the end-to-end process of immigration from a tax perspective, and I've worked with them on a day-to-day basis in ensuring that our clients receive the full spectrum of services, whether they want to make this move on an individual basis or from a business perspective. So please, I urge you, audience, to take advantage of their presence today as they take you through a comprehensive and informative presentation that is to follow. Jazakallah.
Thank you, Raisa, for that and for the nice introduction. So today we'll just be looking at the tax implications for people that want to leave the country. So what we'll cover in this presentation, we'll just cover the overview or general overview of South African tax system. We'll look at the high net worth individuals. We'll look at the residency, and if an individual chooses to cease residency in South Africa, what would be the tax implications? We'll also be covering the new trend of remote working. Well, we'll look at the double taxation. Should someone leave the country, will they be subject to double taxation between that country and South Africa? And we'll look at the reliefs that are available thereof. The last topic that will be covered during this presentation will be when you want to transfer funds outside the country, what will be the tax compliance function that will be required by SARS. Okay. To move, we all know why we need to pay taxes in South Africa, but just as a reminder, the government collects funds from its residents for the benefit of everyone living in the country. Taxes are used by the government to provide services such as health, transport, and everything that is good we are seeing today. So as a reminder to everyone that is attending the seminar today, is that this webinar today is that Do not forget to pay your taxes this year. The tax season will open on the 7th of July next month and will end somewhere in October, November for non-provisional taxpayers. And for provisional taxpayers, it will end sometime next year in January. SARS, as we know, they administer various taxes in South Africa, but one that is most relevant for individuals is the Income Tax Act. Each year, SARS issues amendments to the Act after obtaining comments from all relevant stakeholders, including yourselves. You are always invited to give your opinion, to provide comments. They are all taken into account when these amendments are taken into effect. You will see each year that there may be some new sections that are added into the legislation. There may be some that are deleted. The old ones may be deleted. You know, there's that annual amendments that are happening each year. And the year of assessment for individuals, you may know this, it starts from the 1st of March each year and ends on the last day of February the following year. And how is tax calculated? Tax is calculated by taking your gross income, which we'll discuss later what it means. And you take out your exempt income, and we add the specific inclusions. The specific inclusion could be your lump sum benefits, could be fringe benefits, and so forth. And we also add any capital gains that you may have earned during the year, and we take into account any assessed loss. What is the gross income? We spoke about in the framework. It's important that we understand the definition of a gross income, because there is a difference on how a non-resident is taxed versus how the non-resident is taxed. So the gross income, if you look at the tax legislation for residents, is the total amount in cash or otherwise received in favor of that person during the period of assessment. So for a resident, the resident is taxed on their worldwide income, whereas the non-residents, they are only taxed on a source that is within South Africa. So it's very important, because when you cease your residency, you do not become a resident of South Africa. You will then only be taxed on your source. If your income is from the source within South Africa, that's when you'll be taxed. If you move outside the country and you still remain a resident of South Africa, you will still be taxed on your worldwide income. Let's say you go to Dubai, you earn income there, that income will still be taxed in South Africa, but there will be some relief that will be discussed later. And when we calculate the normal tax liability for any individual, there are also tax thresholds. If you earn, or if you've got an income of a certain amount, you are not taxed. I think this year it's about 93,000, and the tax rates according to Section 5.2 of the income tax. At the moment, the minimum tax rate is 18% and the maximum is 45%. And there are normal tax rebates that are applicable to individuals that are less than 65 years, over 65 years, and over 75 years old. Medical tax credits are also available, which provides a relief on the normal tax payable by each individual. I had mentioned that we will cover some topic like the high net worth individuals. There was a unit that was established within SARS. It was announced in the 2021 budget that SARS will set up a specialized unit to improve compliance of individuals with wealth and complex financial arrangements. Those are called high net worth. The high net worth unit is headed by Ms. Natasha Singh, who was appointed in October 2021. The unit is situated within large business unit within SARS, and such individuals have been allocated a relationship manager, which is a nice thing. Relationship managers, they assist taxpayers in a large way. So if you've got your queries, you can always, tap in with your relationship manager. It's like in a bank. With the bank, you've got if you bank with a private bank, you will be allocated a private a relationship manager. Relationship manager, if you've got queries, you need the statement of account, or you need anything that's related to your bank account, they will assist. That's the personal attention you get if you belong to this the unit. Individuals were given an opportunity in 2016-17 to regularize their tax affairs. If maybe you had foreign investments that you were not declaring to SARS, you were given that opportunity to come forward and declare those assets. That was in 2016-17, but the tax the voluntary disclosure is not closed. You can still make use of that unit. One of the proposals, again, in respect of the high net worth individuals, was made in 2022, where the provisional taxpayers were, in fact, it was in conjunction with these 2021 budget proposals that the taxpayers with the wealth of more than 50,000 will be looked at. So SARS has actually started operating. That unit has operated. Maybe if you belong to that individual, to that unit, you may have received a questionnaire from SARS where they looking at areas like your wealth. They are looking at cryptocurrencies that you have. They are looking at your fixed assets, your shares that you may be holding inside South Africa, even outside. Some of the questions that they ask is in relation to the interest you may have with the trust. If you have received such a questionnaire from SARS, please don't ignore it. Even if you receive any query from SARS in future, don't ignore it. Please take note of it and provide whatever information that SARS requires. But then, who is liable to pay tax in South Africa? Is the burden only with the high net worth individuals? No. Residents as well, they are liable to pay tax. South Africa operates on a resident-based tax system as opposed to SOS. This has been the case since 2001. But then, what is a resident? There is a definition. If you look at the Act, it's defined that a resident is defined as ordinarily resident, and is also defined through physical presence. Ordinary resident, if you look at the Act, you're not going to find the meaning of it. There's no definition of ordinary tax, but of ordinary resident. But what we do, we look at the case laws, because there has been case laws that has been decided in the courts, which assist us in understanding what is an ordinary resident. One of the cases is Cohen case. It was decided in that case that the person's ordinary residence will be the country that he regards as his home, and to which he will naturally, and as a matter of course, return from his wanderings. We've had that, the country where you return after all your wanderings. That's what SARS regards as an ordinary resident in that country. And another case that may also be of assistance is that one of Thompson versus Minister of National Revenue. It was held in that case that the taxpayer's settled routine of life is where he regularly, normally, or customary lives. That's where that is that country which he will be regarded as an ordinary resident of. There is also some assistance that we get from SARS to understand this concept. One is in the interpretation note 3, which also gives a clear picture of what SARS regards as an ordinary resident. There are some steps or some factors that they look at to determine if someone is an ordinary resident in South Africa. One of the things that they may be looking at, they will look at your political activities, your cultural activities. Are they here in South Africa? Where is your permanent resident? Where is your, if you are abroad, do you come to South Africa to visit South Africa? What are the nature of your visits in South Africa? Place of business, what is it? And personal interest. But then at the end of the day, the onus of proof will be on you. You are the one to prove to SARS that you are an ordinary resident, whether in South Africa or in another country. Must also take into account that you can be a resident of more than one country, but you cannot be an ordinary resident of more than one country. Another definition that I had mentioned is of physical presence. So the requirements of the physical presence for you to be regarded as a resident of South Africa, you may have spent more than 91 days in total in each of the current and previous 5 years, and more than 915 days in total during the previous 5 years. That's how now SARS determines your residency, looking at your physical presence in the country. You can cease to be a resident through physical presence, or even within being an ordinary resident, you can cease to be a resident in South Africa. SARS, when you cease to be a resident, SARS will be looking at the manner in which such an individual has been a tax resident in South Africa. If the taxpayer has been an ordinary tax resident, the intention to cease to be an ordinarily resident in South Africa must be supported by various factors. One of the factors when you decide to leave the country and cease to be a resident, one of the factors that SARS look at, the type of visa. When you applied to go to a foreign country, what is the type of your visa? Proof, they may request that you provide proof of permanent residence in your new country or foreign country. If that country provides a certificate of tax residence, they will request that information, details of any property that you may have in South Africa. And if you still have, SARS may need you to indicate why do you still have that property? What are you using that property for? They will ask you the details of your family, whether any family members are in South Africa, and any reasons for that. Like if you have left your children or your pets in South Africa, SARS will need to know on what basis now you are ceasing to be a residency. I mean, you are leaving your kids in South Africa, and then you say you are moving to another country. You know, it may not make sense to SARS if you do that. But we've seen some people, they may leave their mothers or their parents in South Africa, and they move outside. But when they do, they move everyone, their children and their pets and so forth. And when you cease to be a resident, one of the things that you need to take into account is the capital gains tax trigger. Section 9H of the income tax deems disposal of any asset, the amount is equal to the market value. So they deem that you have disposed those assets at a date immediately before the date on which you cease to be a tax resident. So now you will be subject to capital gains immediately when you cease to be a resident. Your year of assessments will end on that date, and a new year of assessment will commence on the date the person ceases to be a resident. You will be liable for capital gains tax. There are assets, though, that are not included as part of the capital gains tax when you cease to be a resident. Those assets are immovable property situated in SA, but does not include interest in immovable property such as equity share. Asset which is after the person ceases to be a resident or a controlled foreign company attributable to a permanent establishment of that person in South Africa. The equity share that you may have received as part of your employment in terms of Section 8B of the Income Tax Act. So what should you do when you decide to cease to be a resident of South Africa? You can't just sit. You need to inform SARS that you are ceasing to be a resident of South Africa. You do that through e-filing. There is a form that you need to complete. You need to do a declaration that you are ceasing to be a tax resident. SARS may request supporting documents, not may, they will actually request supporting document to support your application, and a letter of motivation setting out the facts and circumstances in support of your ceasing residence in South Africa, a copy of your passport, your travel diary, and so forth. Take note that SARS may actually decline your application on the basis that maybe your application doesn't meet the criteria, and maybe you did not provide sufficient documents to support your application. But if they have granted you the application, or they have agreed that you have ceased to be a resident, SARS will confirm again that, and you can request the confirmation in writing from SARS through e-filing. So everything is automatic. You can do everything on e-filing. Then there's another concept that people have been talking about, the financial immigration. That was actually one of the buzzwords when SARS introduced a new section in 2021 which has to do with exemption of foreign remuneration. People were talking about financial immigration, wanting to do financial immigration. That one now is an old process that people were doing. There was a form that you needed to complete with your authorized bank, and it was a process that was done between SARS and Reserve Bank. But now SARS has done away with that. There is a new process that is in place, and Lawrence will cover it during his presentation. There has been a new trend. Some people that are not considering leaving the country, they have considered working remotely. I think we've heard about that, the remote working. You may ask yourself that if you were to be employed by a foreign company, what would be the tax implications for working remotely? The trend that we have seen with COVID is that you will be here in South Africa, but you will be employed by a foreign employer. So what are the tax implications in that case? If you look at the legislation, the obligation to withhold employees' tax lies with an employer. So it says a resident employer has the obligation to withhold employees' tax. In the case of a non-resident employer, a representative employer must withhold employees' tax. So may find that this foreign entity does not have any presence in South Africa and therefore does not have any representative employer in South Africa. Now, does it mean that you are not liable to pay any tax because your foreign employer now, your new employer, which is a foreigner, does not have any physical presence in South Africa? No, that's not the case. You will still, as a resident in South Africa, remember you are liable for your tax on your worldwide income. You are still liable to pay tax, but you will do that in a form of a provisional tax in a form of a provisional tax, because the employer or your current employer does not have any physical presence and is not registered for employees' tax in South Africa. But other levies such as unemployment insurance fund, skills development levy, they will still be liable for that. So you must just take into account that you will still, even though it's not your employees' tax is not withheld or your PAYE is not withheld by your employer, but you are still liable to pay tax, but you will do that through provisional tax. But going forward, there is a proposal to align the foreign employers with the local employers, where they will, which will require the foreign employer to register with SARS for employees' tax. But that we will see in the proposals that will come in July this year. So whatever new amendments that will be made in the Act, we will see it probably in 2024. Now we will consider the concept of double taxation and what will be the reliefs relating to that. I will hand over to Lawrence.
Thank you, Nobukanya. Good morning, everyone. I trust everyone is having a good Saturday. My name is Lawrence Bogwane, and in our discussion today, I will cover the double taxation, particularly looking at the double taxation agreements. We will also look at the DTA tiebreaker test. What is it and what is it used for? We'll also look at the remedies that are used as relief from double taxation, particularly looking at the foreign employment income exemption, foreign tax credits, and the need to register as a provisional taxpayer and pay provisional tax. We'll also look at the tax treaty relief, and lastly, the tax compliance status for international fund transfers. So with the change or move from the source-based tax system to residence-based tax system in 2001, South African tax residents were now subject to tax on their worldwide income. So now where a person now renders employment services in a foreign country, that person's employment income is potentially subject to tax in the country of residence as well as the country of source. So now this created a conflict. This conflict may result to the same income being taxed twice in two different countries. This is referred to as double taxation. So double taxation is when two or more states impose tax on the same taxpayer for the same subject matter. So in order to address this problem of double taxation, countries enter into double taxation agreements, so also referred to as DTAs. And one of the primary objectives of the DTAs is to prevent having a single amount of income of one person being subject to tax twice in different states by allocating the taxing rights to each type of income to one state. South Africa has entered into double taxation agreements with more than 80 countries, which includes, among others, the United Kingdom, the Australia, New Zealand, Canada, the USA, UAE, the Turkey, Mauritius, Namibia, and others. So there is a common misconception about DTAs. Most of South African experts believe that they are automatically tax exempt just because there is a DTA in place between SA and the country of host, and that they are not required to submit or file income tax returns. This is actually incorrect. A person is not automatically tax exempt just because there is a DTA in place between South Africa and the country of host. There are various factors that need to be considered and objectively proven to SARS. And a person is still required to submit and file an income tax return and claim the exemption under the treaty relief. Okay, so now let's look at the tiebreaker test. What is it and what is it used for? So the tiebreaker test is the test that is designed to prevent a person from being tax resident in more than one country at a time by deeming that person to be a tax resident of a single country. The tiebreaker test considers different factors in order of their preference to assign tax residency to a single country. You will find a tiebreaker test in most DTAs under Article 4. For the purposes of our presentation today, we'll look at the DTA between South Africa and the UK. So where you are considered a tax resident of both South Africa and UK, Article 4.2 of the DTA between South Africa and UK outlines the requirements of the tiebreaker test to be applied in determining your tax residence for the purposes of the DTA. Your tax residence status shall be determined in accordance with the following rules. So you shall be deemed to be a resident of the country in which a permanent home is available to you. So remember that a rented apartment with at least 1 year fixed lease agreement is considered a permanent home if it is available to you when you need it. So if it happens that you have a permanent home available to you in both countries, you shall be deemed to be a resident of the country with which your personal and economic relations are closer. This is also referred to as the center of vital interests. So this looks at your where your family is, where your personal belongings are, where you have membership, even gym membership, clubs, where your memberships are at, where your investments are, where your retirement annuities are, your pension, where is it? Where is your employment? So if still you cannot determine tax residence based on those factors, then you move to the next point. So now this one looks at your habitual abode. Where is your habitual abode? A habitual abode is the place where you stay most often. It's your present habits or the mode of life is. So if maybe you have an apartment in UK, and you wake up from that apartment, you go to work every day, and then you come back and sleep, and then you go to work the next day. So your habitual abode would be in the UK. And maybe it could happen that you still can't determine your tax residence based on your habitual abode. So if it's that case, you will be deemed to be a resident in a country where you have nationality. So if it happens still that you have nationality of both countries, or neither, you don't have nationality of both countries, then the tax authorities of both South Africa and UK will need to reach a mutual agreement and agree and assign you tax residence. So we usually assist clients with the application of the DTA tiebreaker rules through tax opinions. This is also usually used to support their declarations to SARS. So remember also that if you are considered a tax resident of another country through the application of the DTA tiebreaker test, you will not be considered a tax resident of South Africa, meaning that your tax residence status in SA will change to non-resident. And when you change or cease your SA tax residency due to the application of the DTA, you will need to inform SARS, and there are 2 channels to declare this information. As Nokanya has mentioned before, you can declare this on your income tax return when you submit your return, or you can declare this on your Rev 01 on e-filing, and then indicate the date on which you ceased your tax residency. And applying a DTA to your circumstances, an annual process. This means that every year you will need to be able to prove to SARS that you are not a resident of South Africa for tax purposes in terms of the DTA. And then SARS will also request supporting documents to support your declaration. Okay, now let us look at the remedies used as relief for double taxation. As I've mentioned before, that it can happen that you may be taxed twice in two different countries. So countries would also have other measures that they can use to provide relief from double taxation. And these measures would be incorporated onto their domestic tax laws. South Africa has the following measures currently in place to provide relief from double taxation to SA residents. An exemption from normal tax on foreign income, a credit for taxes suffered in another country, or a deduction as an expense of taxes paid on foreign income. We'll look at the foreign employment income exemption. The foreign employment income exemption is an exemption provided on income earned from employment services rendered outside South Africa, meaning that this income will not be subject to normal tax in South Africa. So the exemption is only applicable to you if you are a South African tax resident who is an employee and renders employment services outside South Africa on behalf of an employer. The employer can either be a South African resident or a foreign resident for a period exceeding 183 full days, which is equivalent to 6 months, and a continuous period of exceeding 64 days. This is also equivalent to 2 months outside South Africa during the period of 12 months. So the exemption is also limited to income of 1.25 million per tax year. This means that income in excess of the 1.25 million will be subject to normal tax in SA. So whether the way foreign tax is paid on that income or not. And for you to claim the foreign employment income exemption, you need to satisfy the following requirements. Requirement number 1, you need to earn remuneration. Namely, it could be your salary, leave pay, wages, overtime, bonus, gratuity, commission, a fee, emolument, or allowance for services rendered. 2, the services that you render for or on behalf of an employer must be rendered under an employment contract. So there must be an employer to an employee relationship, and the employer may be resident or non-resident, as stated before. 3, you must render the services outside the SA borders, and the employment contract must specifically state that you are or you will be seconded to another country. And then the 4th one, in order to qualify for the exemption, you must be outside the Republic rendering a service for at least 183 full days during a 12-month period. And 60 days of those 183 days need to be continuous in the same period. So that means you must remain abroad at least for 2 months and not come back to South Africa. And then SARS may also request supporting documents from you when you submit a return and claim this exemption. So they may request copies of your payslips. So this is required. These are required when maybe you are paid in a different currency, or if your income is not reported on an RP5 certificate. They also may request a copy of your employment contract or a secondment letter. So whichever is applicable. So this is to provide evidence that there is an employment relationship between you and your employer. And then you will also be required to provide the day's calendar schedule. So this is where you record the days you spent outside South Africa. And then you will also be required to provide stamped passport copies indicating dates of entry and exit in South Africa. Sometimes SARS would also request a letter from your employer confirming the work days you spent outside South Africa and the remuneration paid to you in relation to those days. So this would be applicable sometimes where you are seconded. You have a South African employer and you are seconded outside, maybe for 6 months. and then you also spend some days in South Africa. So your employer will need to provide a confirmation that you spent 6 months outside South Africa and you were remunerated for those days spent outside South Africa. Okay, so we'll look at now the foreign tax credits. Your foreign employment income is potentially subject to risk of double taxation if it is in excess of 1.25 million exemption, the limit, or where the requirements to claim the foreign employment income exemption are not met. So where you have paid foreign taxes on your foreign income, you may be allowed to claim foreign tax credits from your South African normal tax liability on assessment. This double tax relief is only available to South African tax residents. So if you are a non-resident, you cannot claim this relief. So the credit is limited to the foreign tax payable and may not exceed the portion of the South African normal tax payable, which is attributable to the total foreign taxable income. I would like us to look at an example so that you can understand how we calculate the foreign tax credit limit. So in our example, let us assume that during the 2023 tax year, Ms. Smith earned foreign employment income of 2.1 million. She qualifies to claim the foreign employment income exemption on this income. She paid foreign taxes of 740,000 on this income. She also earned local interest income of 45,000 and also earned local rental income of 85,000. So you will see in our tax calculation that we've included all the income in our gross income. We've included the foreign employment income in full, the 2.1, the interest of 45,000 and the local rental profit of 85,000. Remember that the rental profit would be after the deduction of the rental expenses. And then we deducted the exemptions. Remember that we've stated that Ms. Smith qualifies to claim the foreign employment income exemption of 1.25 million. And then there's another exemption, interest exemption. So if Ms. Smith is below the age of 65, she qualifies to claim an exemption of 23,800. And then our taxable income now is 956,200. And then the tax liability on that income will be 296,278. And then we've deducted the primary rebate and the foreign tax credit. Rebate will be 15,714, and the foreign tax credit will be 263,371.99 cents. And then the tax that would be payable by Ms. Smith will be 17,192.01 cents. So how did we calculate the foreign tax credit limit? So you will see that firstly, we had to apportion the foreign taxes that Ms. Smith paid between the exempt foreign employment income and the taxable foreign employment income, because Ms. Smith cannot claim foreign taxes that are apportioned to the exempt foreign employment income, but she can only claim taxes that are apportioned to the taxable foreign employment income of 850. And then after that, we've calculated the foreign tax credit limit. Here you take your taxable foreign income divided by the total taxable income, and then you multiply by your normal tax liability, and then the limit was 263,371.99 cents. So you will see that it was the foreign taxes were limited. She couldn't claim the 299,524, but she can only claim the 263,371.99 cents, and the excess between the 299 and the 263 can be claimed in the following year. It will be carried forward and be claimed in the following tax year. Okay. So now let us look at the DTA tax treaty relief on employment income. So this relief establishes the general rule for the taxation of employment income and also provides for the exception to that rule. So again, for the purposes of our training today, our presentation, we will look at the DTA between SA and UK. Article 14.1 states that employment income is taxable in the country where the employment is actually exercised. For example, if you, let's say you live and you go and render employment services in the UK, What this paragraph or rule says is that your employment income will be subject to tax in the UK. However, there is an exception to this rule. If employment is exercised in the UK, Article 14.2 states that income from employment will be exempt in the UK if the following 3 requirements are met. So the individual must be present. Number one, that the individual must be present in the UK for a period or periods not exceeding a total of 183 full days within a period of 12 months. So that means you mustn't stay or work in the UK for more than 6 months for you to qualify for this exemption. And then 2, the employer paying the remuneration must not be a resident of the UK, meaning that your employer must not be recognized as a tax resident in the UK. And then 3, if the employer has a permanent establishment in the UK, the exemption is only given on condition that the remuneration is borne by that not borne by that permanent establishment. For instance, if your employer has a branch in the UK, your salary must not be paid by that branch in the UK for you to qualify for this exemption. So you need to meet all the 3 the 3 requirements for you to claim this exemption. As I've said before, that there are instances where expatriates are required to pay normal tax in South Africa on their foreign remuneration because they probably do not qualify to claim the foreign employment income exemption, or they have foreign employment income that exceeds the exemption limit of the 1.25 million, or the foreign tax credits cannot cover the total tax payable or tax liability due in SA, or the employee's tax was not withheld from their foreign employment income. So in these instances, you will be required to register as a provisional taxpayer and pay provisional tax. Provisional tax is not a separate tax, but it is like a means through which a taxpayer makes an advance payment towards his or her normal income tax liability during the tax year. So the provisional tax payments are payable twice a year. There's an option of making an additional payment, which is the 3rd payment. So the first payment is due on the 31st of August of the relevant tax period, tax year or tax period. And then the second provisional payment is due on the last day of the year of assessment, which would be the 28th of February or the 29th. And then the 3rd payment is voluntarily and may be made within 6 months of the year of assessment. Okay, so now we will look at the tax compliance status or TCS PIN for international fund transfers. So SARS has enhanced its tax compliance status or TCS PIN application processes and forms so that they can be able to deal with the growing volumes of taxpayers who are requesting third-party verifications, including applications for foreign investment allowances and immigration. So the enhanced TCS system was introduced on the 24th of April 2023, following SARS's consultations with authorized dealers and the South African Reserve Bank. So taxpayers who wish to transfer funds abroad will be required to obtain the approval for international transfer of funds from SARS if the funds to be transferred exceed 1 million, but up to 10 million in a calendar year. And then there is no approval for international transfers that is required for transfers of a single discretionary allowance of up to 1 million in a calendar year. And then a more stricter verification process will need to be applied to SARS, where the funds to be transferred are in excess of 11 million. So in those instances, an application for a letter of compliance will need to be made to SARS. And this application is also subject to the SARB approval. So if you apply for the TCS PIN for the transfer of funds, you will be required to indicate your tax residency status. And if you are non-resident taxpayer, you will be required to provide the following information to SARS. 1, confirmation that you have ceased to be a tax resident of South Africa for tax purposes, including the date on which you ceased to be a tax resident. 2, you will need to provide a detailed calculation of the capital gains tax or a schedule relating to any tax payable on deemed disposal of the assets on the day before you ceased to be a tax resident. If the non-resident application is for a family unit and one or more members of the family unit are registered for tax purposes, they must apply separately to be issued with the TCS PIN. You will also be required to confirm the following on your application for the TCS PIN to transfer funds abroad, whether you are a beneficiary of a trust or trusts, whether you have shareholding directly or indirectly in any legal entity, whether local or foreign, of at least 20% or more, whether you have any existing loans or loan to a trust, whether a local trust or a foreign trust. You will also be required to submit the following supporting documentation to SARS, relevant material that demonstrates the source of the capital to be invested. SARS has provided 9 different types of sources for selection, and there's another additional option for if you have other sources that are not on the list. And the types of sources included would include loans, donations, inheritances, if it's a sale of crypto assets, etc., etc. And then you'll also be required to provide a statement of assets and liabilities for the previous 3 tax years. This should include disclosures of investments, loan accounts, and distributions from local or foreign companies or trusts, etc., etc. Just to mention that all the documents that are submitted to SARS or provided to SARS in respect of the approval for international transfers will be subject to the verification process. Yeah, I think we've reached the end of our presentation. I'll hand over to the MC. Thank you.
Thank you so much. Much appreciated for the insightful presentation and the knowledge here. We have a few questions. I'm just going to read them out and the panel can respond. Question number 1, can an application be made to SARS for a SA tax resident living abroad for the last 6 years, earning foreign income, not to be taxed on the foreign employment income, but only to be taxed on the SA earned investment income, who also meets the physical test presence? Lawrence, did you get that?
Okay, just to make sure that I'm getting the question. So is the question that if a person has been abroad for, let's say, more than 6 years, and then they would want to claim the exemption, is that possible? Is that the question?
Yeah. Yes, correct.
Oh, okay, it is possible as long as you have the relevant supporting documents. If you haven't submitted a return, let's say for the past 6 tax years, you can submit and claim the exemption, but you will need to provide the relevant supporting documents as proof that you qualify to claim the exemption.
Thank you. And then just also to touch base, if he's living abroad, can we split the foreign income so where it won't be taxed in his South African tax income? Because
Okay,
he'll be getting taxed in a foreign entity from his foreign income. And if he has, for example, property income in South Africa, can we separate the two and say only tax you property income in South Africa and your tax that you're paying on your foreign income is taxed and submitted in that foreign country, as opposed to bringing both into our South African ambit?
Okay, so this one will depend on your tax residence. So if you are a tax resident in South Africa, you will be required to declare both your foreign income and your South African income. But if you are a non-resident in South Africa, you will then only declare USA sourced income.
Okay, perfect.
Yes.
That covers the question. Question number 2 is, how long after physically leaving South Africa does one have to update the RAV1 form and other documents that need to be submitted to SARS?
Okay, Nokanya will also add or correct me if I'm wrong. We've had instances before where people backdate if maybe you've left in, they say 2016, you can go back, if maybe you didn't submit a return, you can go back and amend the RAV 01 and then declare the date when you left South Africa. So you can go back. So like you can only declare dates from today or in the future. You can go back.
Yeah, we've had instances where a person have left long before, and SARS is only considering the application now, or it was considered then. Yeah, so there are instances like that, as Lawrence has said.
Thanks. The next question, with the prolonged weakened exchange rate, will SARS ever increase the ceiling of the 1.25 million?
It has actually increased from 1 million to 1.2 after considering public comments. So we don't know. We will see. We don't know. We cannot pronounce on that. It's also our wish that, you know, it increases. If you look at the amount, it looks more. But yeah, we will wait and see what SARS says, or what, yeah, Treasury says.
Thank you. Next question is, non-tax residents will need approval for all funds transfer from the first rand. No discrepancy available on them. Is that correct?
Can you repeat that one?
I think what the participant is trying to ask is, when you're transferring funds out, the first R1 million, do you still need approval for that? And after that R1 million, because I think the next question also comes out there. So after that approval of the next R1 million, so the first one is going to your discretionary allowance, and anything above that, you will need approval. But within that first R1 million, do you still need approval to take that out?
You are not required to apply for the TCS PIN if you're only transferring 1 million. But if you are transferring more than 1 million, then you need to apply for the TCS PIN. So remember that the 1 million is only for 1 year. So if within that 1 year you anticipate on transferring maybe 2 million, then you'll be required to apply for the TCS PIN. But if it's only 1 million within that calendar year, then you won't be required to apply for the TCS PIN.
Okay, confirmed. The next one is, non-tax residents, will they need approval to move funds out? And obviously there won't be a discretionary allowance available to them.
Yes, they do. They do need to apply as well.
Okay, but is there discretionary allowance available to them?
I think there is.
For non-tax residents.
I will have to confirm. I don't know if I can respond to this one, maybe via email.
No problem. We'll
Yes,
share
but
the details
I can confirm, yes. Yeah.
Okay, and then the next one is, for foreign tax residents that earn South African sourced interest. Just to reiterate, foreign tax residents that earn South African sourced interest, what is the interest exemption available?
As stated that if you are an individual taxpayer, you qualify, whether you are a resident or non-resident, you qualify to claim the exemption. But there is also another exemption for non-residents. So this one, you need to prove to SARS. For you to get that exemption, the interest will be fully exempt in South Africa. You will need to prove that you are not present in South Africa for more than 183 days. And then if that interest is not related to the PE, permanent establishment in South Africa, then you will get that exemption.
Thank you. Next question. In slide 44, you said there were two ways to tell SARS that you're ceasing as a residence. Is the income tax return option still available?
Yes, it is. So if you submit your return maybe in July, you will need to tick. There's a box where you need to tick, and then you put a date when you cease your tax residence. But that one is, I think it's for when you cease during that tax year when you submit the return. So it's relevant for that tax year. But if maybe you are backdating, then you will need to go back to the Rev 01 form on e-filing and then update the date when you backdate your exit in South Africa.
Next question. Will employment income earned in South Africa by an individual who ceased their tax residency be subject to PAYE whilst rendering their services in South Africa for an employer?
Okay, and by anyone who sees their if he's rendering the services in South Africa, I mean the source will be South Africa.
Correct.
So
it will still be taxed.
non-residents are taxed on their non-resident are taxed on source, residents are taxed on worldwide income.
Thank you. Next question. Someone said that the option is no longer available on the Rev 1. I think we've covered that one. Looking if there's any other questions coming up on screen. Okay, last question that I see up here. When do you need to inform SARS that you're no longer a tax resident? Is there a time frame from when you left the country or only when you file the return?
SARS encourages taxpayers to inform them immediately. So if you say that I'm leaving maybe within this month, so you need to go on the Rev 01 and amend the form and then declare the date when you ceased.
Thank you so much, Lawrence and Kanya. I see that there's no further questions.
Rupan, just on the responses provided to date, obviously these are general responses. The specifics that have been that are relating to the audience questions, I would recommend that please feel free to reach out via email and also via the links to get exacts, because I think there is the need to consider specific requirements and what the individual's query is to avoid having possible challenges in the future.
Thanks. I see two more questions came in. Can we go for them? One is, will SARS honor people exiting under the old MP336B form, which was stamped by them?
My understanding is that that form is no longer applicable. So from the date that was mentioned during the presentation, that's when now we have moved to the new regime of application. So I don't think SARS will still honor this one because it's no longer applicable.
Next question. Does the 1 million have to be transferred in one payment or can it be done in part payments?
Hey, Lawrence?
Yes, you can transfer in parts, but the limit is 1 million. So if you know that you will exceed that 1 million, then you'll need to apply for the TCS PIN.
And also note that the 1 million rand, if you are traveling and spending abroad via your credit card, that's going to be reduced from your 1 million. So whatever you're traveling and using, it also eats up into the discretionary allowance in that financial year.
Exactly.
Thank you. Since there's no more further questions, members and participants, please be note that the slides will be shared to your email that you registered on this webinar. So all of you all will get a copy of the slides and information and the contact people for the presenters that presented today.
Lukman, before you move off, just maybe the intention going forward. Alhamdulillah and Jazakallah for giving us the opportunity to engage with you on this. I mean, the intention going forward and the intent for further webinars on country specific, perhaps you could just touch on that as well.
Yes, that's fantastic. If there's a keen interest, we can possibly do follow-up sessions on this with specific examples to countries where people are looking for solutions towards.
Thank
you. Moving on behalf of the Association of Muslim Accountants and Lawyers and the Minara Chamber of Commerce, we would like to extend a vote of thanks to Suleiman Lockett from SNG Grant Thornton and his team of experts, Maulana Riaz Day, for partnering with us in today's webinar. May Allah subhanahu wa ta'ala accept all our efforts, Ameen. And lastly, to the participants for taking time to join us in today's events and making it a success. Have a great day. Take care. Assalamu alaikum wa rahmatullahi wa barakatuh.